Well, greetings, Tony Virtue here again with our monthly update. Look, a volatile month. Finally, the Australian dollar fell, and it fell hard and it fell quickly. It fell 8% down to 95 cents. The Australian equity market reflected that as well and also fell by a similar amount. Now, in part, that was driven by international investors that had a good run in Australia. Suddenly, the value of their investments in Australian dollars had gone down, and so they sold off quite aggressively, particularly in the banking sector. Look, not the end of the world for our export industry. Low interest rates and having a low exchange rate is valuable. But in the very short term, there will be speculation and there will be some ups and downs as we work our way through this. The first graph shows the comparison of the decline in the Australian dollar and the decline in the Australian equity market, which is pretty self-explanatory. It seems a while ago now, but we did have a federal budget a few weeks ago, and the deficit after the 4 downgrades came in at 19.4 billion. So not ideal and fairly structural in some of those deficits. The combined debt now is $300 billion. To give you context, that's very similar to the market capitalisation of our 4 largest banks. So that's a big number, and it's going to take some time to shift there. The next graph just shows where the money came in and where the money went out, and probably a sign of the times that the opposition's right of reply probably got a greater level of interest than the government's. So clearly we're living in interesting times. We do have an election as I speak, planned for 3 months' time, but that may or may not change. So naturally people are nervous and edgy, and that's to be expected at a time like this. I want to give some context to this as well, though, that the truth is interest rates are at a 60-year low. The US market is doing quite a lot better. We're now back at very close to all-time highs. China, even though it's slowed down a little, is still growing at twice the pace of the US. And there's a massive opportunity for nimble Australian businesses to expand outside of the resources sector into the Asian region. In short, we need to develop other industries apart from resources to build our economy. And financial services and education are 2 of the key ones that we could do quite a lot better with. You do need to understand and accept, if you are going to invest in shares, that a 10% swing up or down is to be expected in any 12-month period. And over the full 12 months, the markets are still well up. So that's the nature of how markets operate, and speculators do come in from time to time to test market valuations. As we come towards year end, just a few ideas. First of all, for those of you who are able to, from employer contributions for superannuation, remember we have this $25,000 limit. Don't go above that, please. If you do now, they will give the money back and you'll be taxed at your marginal rate of tax, not the highest rate of tax. So that could be from your employer's contribution or from salary sacrifice up to that $25,000. Those of you who are relatively close to retirement, you may want to consider putting in up to $150,000 in this year, and you can bring that forward to up to $450,000 if you wish to make a substantial contribution from your own resources to top up your superannuation prior to retirement. Those of you who have a reasonably positive attitude to equities, consider prepaying the interest payments. Interest rates now have come down substantially. A lot of the prepayments are below 6%, so consider that. There are also some protected loans on equities going forward, and with the share market coming down, this may not be a bad time to get into the market if you can take a longer-term view on opportunities there. And finally, do your prepayments as usual for income protection, etc., where that's viable for you. At a local level, we had a great function at Hugo's, another record crowd, so it was terrific to see you all there. Our website, we have put a lot of time and effort into this, and we are launching that this week. It will have, amongst other things, a private client portal. This will mean that if your circumstances change, you'll be able to update us, and we'll be able to get any legal or key documents across to you that you can see at your own time, rather than sending it via email or by mail and you miss it or whatever there. So I'm pretty confident that will be a better way of communicating moving forward there. It's going to be pretty chaotic and pretty busy out there for the next few weeks for all of us. It may get a little bit nervous out there, particularly if this political matter gets difficult. So if you are concerned, please ring us. We're here to support you through that. We're here to guide you through to the long term, not a short-term situation there. And with that, I'm going to leave you for the day and wish you best wishes. Thank you again, Tammy.